Hello and welcome to the Gold and Silver Club end of week review non-farm payroll special on the 7th of March 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for gold, silver, oil, natural gas and commodities. We'll be looking at the top trades of the week. We'll be going through live market commentary and technical analysis. We'll also cover the week ahead, so key events looking forward. We'll go through any questions you may have, and of course we'll be doing a non-farm payroll special preview as well of the markets just prior to non-farm payroll, which is going to take place in the next 2.5 hours. So let's, with that, we'll crack on. So we've had a very interesting week again with gold reaching 2014 highs. We'll take a look at the charts very shortly, but we are at some very interesting levels prior to the non-farm payroll announcement. So we can certainly expect some fireworks today. If we move over to the fundamentals, so commodity traders, of course, are awaiting the US non-farm payroll data, which is due to come out shortly. Gold prices booked mild gains this week as traders await the release of US non-farm payroll data for further cues on the US economy and the Federal Reserve monetary policy. This week, gold prices hit a fresh high of $1,274 an ounce from the previous week's close of $1,242 an ounce before retreating back down to support of $1,250. This week, gold has been supported by an outflow of capital from equities and emerging markets amid global economic concerns. So the week's mix of US data has added to the trend as the Federal Reserve continues to taper. So a wave of currency declines are hurting a number of emerging market economies ranging from Brazil, Russia, India, South Africa. This is prompting local investors to move their capital away from depreciating currencies and into safe havens like gold. We'll be looking at the top trade of the week, live market commentary and technical analysis, the week ahead, so key events moving forward, and of course answering any of your questions. And it is, of course, non-farm payroll today. So this week, we're actually trading at $1,348 an ounce at the moment, just shy of a very key level, which is 1,354. It's a key Fibonacci level. We'll be watching this very closely today prior to the non-farm payroll announcement. If we get a breakout, we've got some very interesting technical levels ahead. I want to cover those with you very shortly. So traders are anticipating February's non-farm payroll report. The most important US economic report of the month is the US jobs report, non-farm payroll data. The Department of Labor will release the latest employment data from 8:30 a.m. Eastern Time, 1:30 p.m. GMT. For 2 straight months, non-farm payroll data has missed expectations. So today's report could be pivotal. Will certainly offer further clues about the health of the world's largest economy and whether the Federal Reserve will keep its monthly asset purchases at the current pace or tapering. The general market consensus expects the non-farm payroll data to report employers adding 149 paid jobs in February compared to 113k in January. So whilst the unemployment rate looks on track to remain at 6.6%. The 2 likely scenarios traders can expect today is either better than expected reading above 149,000 jobs, general consensus. This outcome will be on the bullish side for the US dollar, which will of course be bearish for the precious metals. Note that the US dollar is already starting to move lower today. We'll take a look at that, but we'll see if that gives us some indication of a possible breakout today on gold. On the flip side, a weaker than expected reading below 149,000 job, general consensus will be viewed as bearish for the US dollar and bullish for the precious metals. So either way, today's report is likely to create market volatility and present traders with highly lucrative trading opportunities. We'll look at the technicals very shortly with you. So we're at some very interesting levels on gold right now and the US dollar too. So before we start, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas and the commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy. Also writes for a number of global business and financial publications, and we've appeared frequently on financial TV. So that's a bit of background, guys, on the Gold and Silver Club. So we'll move over and we'll have a look at the gold price at the moment. So gold is currently trading at $1,348 an ounce. We're just shy of 2014 highs at the moment. So we have some very interesting levels, which we could see a breakout from today. So we'll be keeping an eye on that, and we'll go over some setups with you very shortly as well. The top trade of the week this week has, in fact, been on the energies. The WTI crude oil this week has provided us, this was a setup on Tuesday. We had this on Brent and WTI. We broke through a major trend line, had a really solid setup on this. It was a sell short for 192 points. You can see on the chart there, we've got into the trade, 60-point risk on that. So each lot traded was $600 risk for 192 points profit. So $1,920 profit for a nice 3-to-1 as we continue to fall. We've had a really nice move lower on WTI and Brent, which we had some really great setups for earlier on this week. So that's been our top trade of the week. Nice 3-to-1 on the energies. And we'll move over and we'll have a look at the charts now. So let me just switch screens and bring you over to our charts. Okay, the first market we, of course, want to take a look at today is going to be gold. So gold at the moment, we're on the daily time frame at the moment for gold. So I'll just make it clear what we are looking at here. So okay, we'll just get a screenshot here. Here is the key level that we are looking to break at the moment, 1354. You can see this providing resistance on the daily time frame, just shy of it. 1353 is providing a lot of resistance. This is going to be a very key level today during today's non-farm payroll announcement. If we can get a clean break above 1354, we've got a very clear resistance channel just above, which catches the price around 1362. If we get a break above 1362, next major resistance is 1373. On the flip side of that, a very key level of support that we're looking at the moment is 1345. If we get a break below 1345, we're going to come into some supportive moving averages here around the 1336 level. So you can see very clearly we are starting to develop a consolidation, very common prior to non-farm payroll announcements. And it's good that we're getting this consolidation at such a key area around the 1354 level. So a breakout in either direction we would expect to set up. Now non-farm payroll is very well known for having big moves and then retracement. So it might be a case of being in and out fairly quickly on these moves. But either way, we should get a breakout here on gold, given the key levels we're at at the moment. If we just move over and we take a look at the 4-hour time frame at the moment on gold, you can see this consolidation a little bit more clearly here. So this is the consolidation that we're currently looking at. And again, a break above 1354, we'll be looking for a break towards this next Fibonacci at 1362, a break below 1345, down to 1336. So either way, it's about an 80 to 100 point move in either direction here. So that is definitely our real top pick of the day. Gold is looking really interesting here just prior to non-farm payroll. Other markets I want to just draw your attention to at the moment is going to be the coffee market. Coffee has had some great breakouts this week. In fact, this year alone, we've had some huge moves to the upside. If you take it on the weekly time frame, we've had over in 2014 so far, coffee has had a 50% move to the upside. It's been absolutely huge. A lot of fundamental reasons for that as well, which I won't go into too much detail on today's webinar, but you can find out more about that on our newsletter. At the moment, this is what I'm very interested in for a continuation of this breakout to the upside. So I'm looking for a break above this week's high again here on coffee. If you look at the daily time frame, we've got a key level of resistance just above, just around 205 at the moment on the daily time frame. And we're just going to the 4 hour. You can see this consolidation which we've got. And I'm looking for a breakout, ideally for a nice 2-to-1, come up to the next key Fibonacci, which would be 229 at the moment on coffee. So that's what I would be expecting. If we do see a fall in coffee, I would expect to move down to 179, the next key fib level, and possibly a bounce back and a continuation of the uptrend. But at the moment, we're very much interested to see if we're going to get a breakout here above the 205 level on coffee. Move across to natural gas, very similar situation. Natural gas also has been consolidating for the last week. We're seeing the price contained by some very key fib levels as well here. So I'm looking again for a break, really above 4.75 here to the upside, which would also be natural gas clearing above the 50-day moving average. That you can see the risk to reward on that is immense. We could get some really nice, be looking at that really nice breakout to the upside. If natural gas managed to come back up and get back up above some key moving averages here, break out above these fib levels, we could really be in for a good risk reward here. You can see it up to about a 6-to-1 to the upside. What I do note on natural gas at the moment, on the monthly time frame, we do have this huge inverse hammer that hasn't been triggered to the downside yet. But if we do trigger to the downside there is a potential setup as well for a sell short. So I'll be monitoring that as well. We've got a fairly good risk reward on that as well. Could probably get about 2-to-1 out of that for a breakdown on non-farm payroll. So for me, natural gas is definitely a top pick for today's non-farm payroll. It does normally move really well on news announcements. Federal Reserve, non-farm payroll. Natural gas is definitely going to be a top pick, as well as coffee at the moment if we get a continuation of a breakout to the upside here. So I'll be keeping an eye on that too. If you take a look at some of the agricultural commodities at the moment, if we take a look at corn and wheat, they are getting a great breakout at the moment. Wheat today, in fact, it's moving really nicely now. Wheat has just broken above its 200-day moving average, and it's just starting to rally above that. There's no real clear resistance for wheat now until we get back to the next Fibonacci level above 682.34. We could have a huge move from here. It's about another 250 points to the upside. You can see we've broken above the 200 MA, broken above a downward trending resistance channel. Corn, very similar. We're getting a really nice breakout here to the upside on corn. We were looking at this for a potential pullback yesterday, which didn't actually occur, and we've had a really nice breakout to the upside. You can see we closed above the 200-day moving average yesterday, and really prior to non-farm payroll, corn and wheat already breaking out. Is coffee going to follow suit? Are we going to break above 2014 highs? We're going to see natural gas follow suit as well. Wheat, Ukraine is a major exporter of wheat, and obviously all the fundamental news which has been coming out of Ukraine this week has caused a huge move to the upside. Again, you can find out more about that on our weekly newsletter and why wheat is breaking out to the upside at the moment. But getting above this 200-day moving average is very important. We could really see a solid move to the upside. You can see we bottomed out at the end of January here, and since then we've had huge moves on both corn and wheat. Okay, so if we go back to some of the energies here, let's just move over to WTI and Brent. Let's just start off with Brent here at the moment. So Brent did have a huge fall this week. It's actually found support at a very key trend line. Again, if we go back on the daily chart, this trend line has been in place. If you go back on the weekly chart, this trend line has been in place really going back to 2012. And we got another bounce off that major trend line again just yesterday. At the moment, we do normally see on non-farm payroll, the energies pick up a lot of pace. So we'll be watching out for this, see if we're going to get a retest of 106.89 key fib level, and if we're then going to get supported and we see a move to the upside, or whether we're just going to get a continued move. There's not a really clear setup actually at the moment on Brent there on the 4 hour. I'd still prefer gold, natural gas and coffee as top picks right now. But if we do get a break above yesterday's high here, we could see a continued rally to 108.43 when we've got all the key levels above here. And also I'd be monitoring for a break below the weekly lows here as well. If we move across to WTI, again, we've made most of our money already on the energies this week by just taking advantage of this break of key levels to the downside. You can see that WTI got some support here just above the 200-day moving average. We're consolidating just prior to non-farm payroll, which is to be expected. So we're getting this little consolidation. Let's just remove this indicator here. And you can see this consolidation at the moment, which is containing the price just prior to non-farm payroll. So we may get a breakdown back to around the 100 level or a breakout above 102.21 and get a move back up to 103.97. So we'll be monitoring that breakout. WTI looking more interesting than Brent at the moment. Australian US dollar has actually finally broken out. For Australian US dollar, we've been consolidating and finding resistance at this key Fibonacci level pretty much for most of 2014 now. It was the third test of this level. We did break out last night and we break out again today. The 200-day moving average is not far off. So we might find that Australian US dollar does get capped to the upside here. Of course, Australian US dollar very strongly correlated to gold as well. I do note at the moment that platinum and palladium are breaking out to the upside. So we're seeing that move already in those markets. If Australian US dollar breaking out to the upside, some of the other commodities. And do note as well, the US dollar index right now is actually being hampered. So the US dollar index has broken through a major level of support here at 79.55. You can see it's coming down today, which again, the US dollar index normally moves inverse to gold and silver. So the fact that the US dollar index is already starting to give way and come lower, I really would be positioning for potential breakout now on gold to the upside. But of course, we await further news from non-farm payroll here as well. Okay, let me bring it back to, so we'll just take a look at some of the other metals as well. So if we move over to silver at the moment, silver has done well this week to find support at the 200 MA. We were wondering whether that was going to break or not, but silver managed to hold firm on that level. Very interesting to see the market be supported so well by the 200 moving average. And we can see the market just consolidating at the moment. Not doing as well as gold, but it's still holding onto some of its gains here. So again, we're probably going in further direction on today's non-farm payroll. If I had to pick between gold and silver, I'd pick between gold at the moment, much more clearer in terms of a setup. But if we get a breakout on gold, that'll probably follow through for silver as well. If we take a look at copper at the moment, copper really has delivered on its monthly chart here. If we go out to copper, we finished the week with a really nice inverse hammer here on copper that got triggered this week to the downside. On the weekly chart as well, we had an inverse hammer which continues to follow through on the weekly as well. So copper not faring that well at the moment. We were expecting further downside here. You can see it's broken down quite severely today. It's broken through 2014 lows at the moment. Copper right now, for me, that move is a bit overextended on the day already ahead of non-farm payroll. I would really put my focus personally is going to be more on gold at the moment out of the metals ahead of non-farm payroll. So just looking at this consolidation zone. We may not break out above 1354, which is fine. We may find that the US dollar index does get supported and we see a rally to the upside, in which case we could see gold sell off here. Then I'll be looking at a key break below 1345. So that is the other scenario here as well. But either way, we're at some very interesting levels. So again, really my top picks for today would be gold is going to be a top pick for today. We're going to be watching that very heavily. Natural gas, definitely very interested to see which way we're going to break out here on natural gas. The data was positive for natural gas. I think we just had a question from Mr. C on that. You're absolutely right. Yesterday's news was positive for natural gas. We did see a breakout yesterday on the 4-hour time frame. We had a nice surge from this little upward trending channel. It was just under about 100-point move to the upside on the natural gas inventories. Keep an eye on coffee as well. We could get a breakout to the upside. And for those of you who like trading the agricultural commodities, we're getting a lovely breakout here on corn and wheat, and I just think this is going to continue now. We've cleared above the 200-day moving average, very important. So today, wheat and corn, corn did it yesterday, actually closed above it, but wheat, check out wheat. Already, wheat is off to the races here. We've already moved over 100 points, so I'll be keeping a close eye on these commodities too. Okay, so those are really our top picks for today prior to non-farm payroll. Let's just see what other key news announcements we have as we move into next week as well. Okay, so the week ahead, obviously today we have US non-farm payrolls at 1:30 p.m. GMT, 8:30 a.m. Eastern Time. Non-farm payroll measured the change in the number of people employed during the previous month, excluding the farming industry. Job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. And you'll see that inverse correlation with gold and silver. So if you are trading non-farm payroll live, a tip for you, try and be flat before the announcement, and so that you can take advantage of the moves in either direction, that you don't have any bias just prior to the announcement, and also monitor the US dollar index, which will move inversely to the metals. Wednesday, the 12th of March, next week, we've got US crude oil inventories. That was very easy trade this week. The US, they had a surplus of inventories. That was bearish for oil, and we immediately saw oil start to fall, drop through some key levels. It was a really easy trade for a quick 100 points and then delivered over 24 hours, just under 200 points. So if you're trading the energies, do make sure you put this into your diary. 3:30 p.m. GMT on Wednesdays, 10:30 a.m. Eastern Time. Next Thursday, 13th of March, we have the US core retail sales. This report measures the change in the total value of sales at the retail level in the US. It's an important indicator of consumer spending. It's also considered as a pace indicator for the US economy. So that is going to be next Thursday, 1:30 p.m. GMT, 8:30 a.m. Eastern Time. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. As we move into next week, also next Thursday, 13th of March, 5:30 a.m. GMT, 12:30 a.m. Eastern Time, we have Chinese industrial production. So industrial production measures the change in the total inflation-adjusted value of output produced by manufacturers, miners, and utilities. China is a big buyer of gold, silver, copper, and oil. So a stronger than expected number should be taken as positive for the metals and energies, and a lower than expected number should be taken as negative. Next Thursday, 13th of March, we have the US natural gas storage. So the Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past weeks. That's at 3:30 p.m. GMT, 10:30 a.m. Eastern Time. This week, that was very much positive for natural gas. We did see a big breakout, that 100-point move yesterday on that. Great if you're trading the energy, so do have that in your diary as well. Next Friday, 14th of March, we have Michigan Consumer Sentiment. So 2:55 a.m. GMT, 9:55 a.m. EST. That index rates the relative level of current and future economic conditions. There are two versions of that data released 2 weeks apart. Preliminary data tends to have a greater impact, so a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. So those are really the top 6 announcements that you should have in your diary just for trading commodities as we move into next week. So, of course, in 2 hours' time, we do have non-farm payroll. So this is going to be a very highly impact news announcement, as I'm sure everybody knows. So it's definitely hats off to you for being on today's webinar, for getting some preparation in before the non-farm payroll. As you can see there, we've got some really interesting setups prior to non-farm payroll. I wish you all luck with that. If you would like to find out more about how to join the Gold and Silver Club live trading room, we'll be trading non-farm payroll very shortly with the Gold and Silver Club, with our traders. If you want to find out more about how to join the Gold and Silver Club, our exclusive trading community, find out more about our workshops, you can certainly do that and the following information on the page. So numbers on the screen, but you can just go to www.jointhegoldensilverclub.com. You can email us at office@thegoldensilverclub.com, or just call us on one of the numbers on the screen. So London 0207 193 043, our New York office +1 646 828 0403, or our South Africa office +27 11 083-8403. And of course, just make sure you take advantage of our newsletter. So I know a lot of you do already, but if you haven't done so, you'll get updated news on the energy markets, weekly news on the energy markets, on the metal markets, and the agricultural commodities. Okay, so do make sure you take advantage of that. Okay, so that is a wrap for today, everybody. So I wish you good luck for today's non-farm payroll. Have a great weekend, and we will catch you back here the same time next week. Okay, all right, take care, everybody. See you on the next one. Cheers. Bye-bye.